Cool. So hello, everyone. Thank you for joining. It's a pleasure to be here. As David mentioned, this is my first time here. I'm really happy and excited to be here, and I hope you like this presentation. My name is Leav. I'm the co-founder and CEO of Samurai. Samurai is a platform to help you gain and maintain an edge in the market. We help you improve your option trading, save time, analyze trades, and more. Basically, we're your secret weapon in trading. Let's just see if I can. Okay. So the agenda for today's presentation is pretty simple. I want to get off the PowerPoint and share my screen, show you how I use Samurai to find trades and how you can do this as well. So we'll go really quickly about me, then I'll show you 4 use cases for using Samurai, and then I'll walk with you and show you what you can do next in order to take advantage of what you just learned and how you can use it for yourself. So before we start, just a quick disclaimer. Everything in this presentation is for education purposes. I will talk about the market, and I will talk maybe about, I don't know, maybe I'll talk about specific stocks. But the idea is not to talk about the stocks as an investment advice, but as an education. Try to learn the process and why I'm looking at them and not about them. There's no 100% guarantee, so I don't know if those trades fit you or not. So please take this into consideration. And also be aware that trading has risks. So consider if the risk is right for you. With that, I'm happy to begin. So as I said, my name is Leav. I'm a licensed portfolio manager, used to work and manage other people's money. And I'm also an option trader, and I've been trading options for about 17 years. Samurai actually started as a tool for me. I wanted to find trades idea in a consistent manner and have an edge in the market. And I also wanted to do it fast and save time. And that's why I slowly, over years, built Samurai for me. And as I used it, people were starting to ask me questions about my opinions about stuff, and about trades, and what do I think, and about how best to hedge stuff or things like that. And that gave us the idea that maybe a product is a good idea, and that's how we got here, and that's what Samurai is doing now. And with that, I'm gonna turn off the presentation and share my screen and show you how I use Samurai to find trades. But before that, I'll just give you a quick overview about the 4 use cases I'll share, and I'll show you and what I'm about to show you. So the first one is a scanner. The scanner actually scans all the markets, so over 1 million options, and we have hundreds of data points for each. And what it does, it looks for a specific theme and helps you find it. Then I'll go over Excel and Google Sheet integration. This is a new and powerful tool to bring data from our platform into your Excel sheet and actually your workflow. The third would be a stock scenario. It is a way to optimally express your views in the market. So you bring your views in the market. Let's say Twitter will be 54.20, and then we will help you find the optimal way to play that view. And afterwards, we'll talk about, at the end, a trade window and the trade log. This is basically to close the loop and show you what you can do with that. And after that, I'll return to the presentation and we'll see what next steps you can take. Okay, now you should see my screen and you should see the option Samurai window. Can anyone type and say that they see it? I'll go on in the meantime. Okay, thank you. So basically, this is the main screen where you see our 4 top models on the top menu. And the first one I'm going to present is the scanner. The scanner, as I said, allows you to find patterns and themes according to your views and find trades for them. So for example, you can find oversold stocks that you can sell puts on, or maybe covered calls on dividend paying stocks and then you enjoy 2 income streams. It can help you find iron condors that have a high probability of profit and a lot of premium, or like a broken wing butterflies that have riskless up or down profile. So this is like a cheap way to take directional bets. So the possibilities are really endless here. And to get started, to show you how it works, I'll start from the predefined scans. These are the templates and boilerplates that we have to help you get started. We have over 40 of them, and we add more all the time. And we have tags here to help you kind of like navigate and filter them to what you're looking for. For example, if you click the bullish, then you see only bullish. If you click on bearish, then you'll see only bearish scans. Credit or anything like that. I like to trade naked puts. So for this example, I'll show you an example of what I use when I sell puts. And I will use the sell out the money puts, high probability trades that have profitable stocks and they are oversold. I'll click the customize this scan so we can see what are the parameters for this scan. So basically we see that we want that there will be no earning events before expiration. And we're asking that they'll be oversold. We are measuring it here through RSI, and we want the RSI to be oversold at least 2 days. Then we have a stock score filtering that we want stocks that have relatively good quality. And here we have some options metrics that we want more than 75% probability of profit according to the math in the option pricing. And we want more than 1% a month or 12.5% annualized return to make sure that there's a minimum return that's worth our risk. And then we see very quickly, we got the results. Right now they're sorted by the stock score, but we can sort them any way we want. One thing that I do when I see it is I click on the row, and then I can see more information about this trade. Here I can see the P&L profile and what option I need to sell, but I want to focus on the stock tab because the stock tab shows me the recent price action for the stock, and in a dashed line it shows me where is the break-even point for this position. I like to do this because I can go over each trade and very quickly see the recent price history and the break-even point. And what I want to do is to make sure that the break-even point is below recent support and as far away as I can from the recent price action. This is because it gives me added security and added confidence that I have a higher probability of profit. So if I go for TIM, which is the first company, I can see that while it is below the recent support, the naked put break-even point is still above some support or some level we saw the stocks in December and October. And for me, it gives me less confidence in this trade. But if I go, for example, for NVIDIA, then I see that it's better, and also AMD. You can also see that last time the price was there, it was around June or July. And with the chip shortages, if I think they'll continue, NVIDIA and AMD might be interesting. The same, you can look at FedEx. And here you can see again that in the last year, it's below the price that FedEx was trading in the last year. And we can, of course, go Netflix. We're not surprised that selling puts on Netflix is way below the market value, the recent price history, sorry, not market value. But again, for Netflix case, we need to think about what's our outlook for the company. So basically, this is how this is what I do with the scan. I take this scan and I look at it every day, and then I see how trades change and what stocks added to this scan, what trades are removed from the scan. And this pattern helps me understand what is the condition of the market, where I should look to find trades and stuff like that. Let's build a scan like that from scratch. So you'll see how to do it. I'll click the Compose New Scan button. And I would do, again, oversold companies, but because before we did naked puts, so this time let's do long calls. It's a bit different. So in the long call, again, I would use the RSI. I'll click the add filter and I search for RSI. By the way, if you don't know what a filter is, you can either hover it or watch the information on the right pane. But here I will add the RSI, and I'll also add an ATR percent. So ATR is a technical measure for a stock volatility. So before I had a high probability of profit, but this trade, if I trade long call, then the P&L profile is that I have limited risk, but unlimited profit. So here I would like to have more volatile stocks, which is why I add the ATR percent. So here I will click the ATR, and let's say that I want more than 3% average movement in a day. So this means that I would only see stocks that have an average move in a day of 3%. The RSI, I would ask to have oversold. In RSI, under 30 is considered oversold. And I would ask that it will be at least 2 days in the oversold territory. I usually, when I build something like that, I like to make initially the parameters a bit more loose, and then I would narrow it down and find what I'm looking for. I don't like to trade stock very short term, like in the day of expiration. So I would do for next week. I would look for options for next week. So when I scan this, again, I get results really quickly. I will sort by the RSI and have minimum RSI. So here I have, I can see what stocks have lowest RSI, and then I can look over them. But here I want to add another unique feature that we have. It's a scenario, and this is a market scenario. Basically, I will add an outlook for the entire market, and I can see what would be the result of the trade in that outlook. So here, for example, I would say that the trades will go up 1 standard deviation until expiration. And if that happens, I want to only see trades that are at least 100% profit. And then I get to see it. And now I will add sorting by max profit. So what I see now are trades that are oversold. I sort them by minimum RSI. And I see a scenario that if the stock moves up 1 standard deviation until expiration, then I have more than 100% profit. And here you can see what all the possible trades. I will do the same. I will click on it and I will open the stock tab. And I can see the blue line is the scenario, which means that right now the stock is traded at 78.96, but 1 standard deviation above is 82.41. So about $4 higher. But the break-even point is 81.08, and you can see that it's really close. So before, because we were selling puts, we wanted the break-even point to be as far away as we can. Here, because we're selling call, we want the break-even point to be as close as possible. And here we see that the stock was here today and yesterday. So it's really close. So I like this trade. And I can do again for NVIDIA, and I can watch this, and CRM and all those stocks. I can slowly look at them. CRM is another interesting, because you can see that the 1 standard deviation above is actually below resistance. So it's very interesting. So this is what I look for. And what I like to do is I like to save the scan. And then I can get to it very quickly every day. And I see what is being added, what's removed. I can also click watch, and I get alerts when every time a new stock appears in the scan. You can see that the scan that we just created is here. And you can see that I am watching a scan that called an RSI oversold intraday scan. So it's a scan for me that I build, and afterwards I see my email and I can get a better understanding about what's changing in the market. So basically, that's what I wanted to show you here. The scanner is a very powerful tool to help you find themes in the entire market. So in this case, we looked for oversold stocks, and then we saw how we can sell puts in them or buy calls. The sell puts, you can go and to the predefined, but if you want to buy calls, I can send you this scan, or you can do this later yourself. So basically, this is the scenario that I wanted to show you here. The next scenario I want to show you is the Excel and the Google Sheet integration. It's something a bit different, but here it allows you to bring data from our platform into your workflow and your Excel. This is a very flexible feature and allows you to do many things. Basically, you build an Excel template and the data appears in it automatically. The Excel can be a stock valuation model, which is what I'm about to show you, but it can also be an option calculator, trade log, a watch list, which we have a template you can download and see. It can have like unique scoring systems, and basically anything you can think of, you can build in Excel and use our data to augment and improve it. So what I'm about to show you here is a very simple Excel model, a valuation model. This helps me understand what is the fair value for a stock, and it's the power for it. It allows me to understand the fair value very quickly. So I am not reliant on an analyst or someone else's opinion. I can understand and get some sort of opinion for myself. And I use it all the time, especially after earnings. So yesterday I used it for Netflix. And everyone were talking about Netflix and stuff like that. But I have the ability to get my own opinion and see how those opinions will play out to the market if I'm right and stuff like that. So the way I use it are two ways. I put my assumptions into the company growth, and then I see what is the fair value, and I compare that fair value to the market price. And the other way is just the reverse way. I use the market price as the fair price, and then I see what is the company metrics needs to be in order to justify that price. So it is a simple model that I only need two inputs, the EPS and the price earning ratio. So the EPS is earning per share, and the PE ratio is price earning. Basically, if you multiply the two, this would be the traded price for the company. So for example, if the company has a $10 EPS and 20 PE ratio, it means that the stock is traded at the 200. Let's just, for example, use Facebook, and I'll show you how it works. So I put Facebook, I'll put what is the current year and what is the expected return I want per year. And then then all the other information is being imported by Option Samurai. I then go to the EPS model, and the blue lines are the blue cells are cells that I control, and the rest are being populated automatically. We can see that right now in the last 12 months, Facebook earned about $13.8 per share, and we can see the growth that analysts projects to it. I think that in current situation, it's a bit too aggressive, so I will take it down a bit. And then we can see what is the current PE ratio that the company is traded in. So 14.5, which is pretty much the lowest the company has ever been traded in. So what I would do, I want to see maybe like 10% growth. So I would just put 18 here. So if the company is doing $13.8 per share today, and in 3 years, it will do $18 per share, it means that the company grew 9% per year compounded. And let's say that I think that it's a reasonable assumption. I also think that this PE ratio is a bit low, so I will put 20, because I feel that this is a fair valuation for a company with Facebook domination and growth potential. So this means that the future price is $360, but that is the price in the future. a dollar in the future is worth less than the dollar now, which is not why the current fair value of the company is $270. And if the market is trading at 188, it means that the company is actually too cheap by 43%, or almost 44%, meaning the company can go up 44% and it will arrive to what I think is the fair value. I also said that I use it the other way around, which means that I use the market price as the fair price. So what I would do, I would try to make the 270, the present value row, equal to 188. So because I feel that the PE is fair, 20 over the long run, so I will say that the company will earn less in the future. So let's see what I need to do. Okay, if the company will earn $12.50 in 3 years, and the PE would be 20, the fair price will be about the same as the current price, meaning that the market currently projects that Facebook will not grow. It will actually lose money, and that is why it's pricing it like that. So now I would ask myself, is the market correct, or my views are different? And I do think that the company will grow more, which is why I'm bullish on it. But it doesn't matter. Like, I can do this with any stock and kind of get my own opinion, and this gives me an edge because I can compare it to the market, and then I can play. I use the next tool that I show you to play it. Another tool that I have is the sensitivity analysis. So as I said, I need two inputs to put. One, what would be the profit in 3 years, and the other, what would be the PE ratio. But these are estimates that I do. The sensitivity analysis tab is I check how those assumptions are sensitive. So if I'm wrong, and for example, the company will not grow 9% a year, it will grow 5% a year, or 4.6. What would be how cheap or expensive the company will be? So I can see that if the PE is 20 and the company grows 4.6%, then the company is still cheap 26%. So what I can see is that the growth rate doesn't really matter. What matters is what would be the PE ratio. So I can see that with my projected growth, even if we keep today's PE ratio, which is about 15, the company is still a little bit cheap. 8% is still not enough to say that it is cheap, but it is pretty cheap. The only thing that can make it say that, oh, it's expensive, is if the PE will go lower, or if the company will not grow at all, which I need to decide if this is a reasonable scenario and how much do I want to take this risk or not. So basically, that is how I use this model. And if you want, by the way, the template, just email me and I'll send it to you. So the next, I have time for question at the end if you have any. But for now, I want to go for the next tool is the stock scenario. As I said, the stock scenario is a tool that allows you to express your views on the market in an optimal way. So let me show you what I mean. To get to this tool, I go to Summary and I click Scenario. And here I can input my views on the market or a ticker. And then Summary checks all trades and all combinations and find the optimal one. So for example, if I think that Twitter, for example, let's say that Elon bid is successful and the stock goes to that price. So if it goes to 54.20, let's say in 2 months, and I run it, then I see different possibilities to trade it. So first of all, we can see that the stock will have 15% return because it's 15% higher than today. But if I buy a call, I can increase this to 51%, almost 52%. I can also trade naked put or covered calls. In that case, the return is much lower, but the probability of profit is much higher because the break-even point is below today's price. It's even below the recent price action. So 35.66 is around here. So it's below the gap up and stuff like that. So it gives you more margin of safety. But dependent on your conviction, you can change this slider. And if you're really sure that it will happen, you can move the slider all the way to the max return. This increases the leverage. In this case, you can see that a 3% return in covered call changed into 20, and now we have 56% return in the long call, and we can even see higher, like 185 and 166% if we're doing spreads. An interesting point here is that it's more profitable to do a put spread in the money than an out the money call spread. It's 185% versus 166%. We can also turn by the slider all the way to the other side, and this is to get as much margin of safety as we can, the highest probability of profit. So we can see that the probability of profits increased on all the trades, but the return decreased substantially. So here it depends on what is my outlook and and how confident I am in that outlook. But one of the powerful things about it is that I can take my outlook from anywhere. It can be from technical analysis, it can be from analysts, it can be like a macro report or a general view in the market that I think that utilities will act better now, or the Qs or the IWM, whatever my view is, I can just put it here. So for example, I'm going to take just a different site. For example, TipRanks, it has nothing to do with us. I just like it because it presents the analyst recommendation very clearly. So let's check Apple. Just as an example, I take Apple and I see that the analysts project the price will be 193.11. So I will go to the stock scenario. I'll put Apple, I'll say 193.11. Again, I can see the recent price action, what is the target. And usually analyst reports and analyst targets are longer term. So here I will check, let's say for a year, almost a year. And again, I can see all possible trades. I can see that if I just buy the stock, it's about 16%, but the call would give me 38%. Again, you can sell covered call for 7.5%, or you have spreads for 60 or 36%. Again, if I move this to be more aggressive, sorry, less aggressive, let's do the more aggressive one, then you can see that all the returns have increased. So we already at 200%, 260% return on the profit versus the risks. So this allows us to express our views and trade according to what we think will happen. So this is pretty much what I wanted to show you on the scenario engine. The next thing I want to show you is the trade window and the trade log. So up until now, we scanned the market, we analyzed it, we found trades, basically researched them, but now I want to close the loop. Now we will trade them and customize them a little bit, or and also we can be accountable for the trade and see how the trade unfolds over time. So for example, I can click the trade button here. Let's do a more conservative trade, for example, and take the put spread is better. So I'll click the trade button. And here you can see the trade window. It allows us to do some customization to the fine-tuning to the trade. We can change strikes or expiration date. Therefore, instead of it's by 115 instead of 120. And then you can see how the P&L changes, and of course all the charts changes and all the data here. What is the profit ratio? What is the max loss and stuff like that? I can put some sort of a comment here. And if I hover on the bottom, I can see that I can send it to TradeLog or to the brokers. I'll send it to a TradeLog. And here it's paper trading, and we can track the trade over time, the P&L, the Greeks, sorry, the ROI, what is the current price, what is the upcoming expiration for the trades. So basically, we can see all this information and track those trades as they unfold. This gives us the ability to learn from our trades. Also, I can see the closed trades. One second. And here I can learn from the trades that I've done in the past. I can group them by ticker and then see what ticker I trade the best. And I can also group them by strategy to understand what strategies I trade and what are the resolutions of those trades and how I can improve over time. So basically, this is what I wanted to show you on the trade log. Okay, so one second, let's go back. So I showed you the 4 use cases. We have like dozens of features, but I think that these 4 are really important, that easy to get started with. So now I want to go with you, and what are your next steps? What can you do in order to use what you just learned here? So first of all, we can go to our site, optionsamurai.com, and we have all the information here. Basically, you can sign up for a free account. You don't need a credit card. You don't need anything. It's really quick. You know what? Let's do this together. I'll just sign up with you so you see how fast it is. I click on the sign up tab here. I'll put my email. Some sort of a password. My name and phone number. Great term position, and that's it. Once I click sign up, I will get into the platform, and this is the same window you saw in the beginning of the presentation, and I will confirm the email later. Basically, I can go here to the predefined, again to the naked put, and I can do the out the money put with high probability, and it's the same scan. If you want, you can see the recording of this presentation and copy and create your own scan, or you can talk to me and I'll send you a copy of the scan that we made together in this presentation. I'm also available here in the chat, where you can just talk to us. If you click contact, and you'll be able to see us and talk to us, and we'll help you here to navigate this software. You can see the scenario, and also in the settings, you'll be able to see how to integrate with Excel. So all the features we talked about are available just here. Also, we have dozens of features, and like I only was able to go over like 4 of them here. So if you go again to our site and click on help, you'll get to our help center. Here you see articles about getting started and what are unique features and more use cases, how you can use more examples that you can use Samurai. But I want to show you that if you go to the getting started section, which has articles about, like the basics of the software, the capabilities overview is like a table of content. It shows you all the features that we have, and those KB articles are links to the knowledge base, and it just takes you directly to what you're trying to learn. And you can see about our volatility measures, liquidity measures, our unique features like the optimal iron condors or spread, the stock scenario, trade analysis, the earning dates that we have, everything you want to learn about it, you can see it here. So these are the 2 things I wanted to show you that you can do. And again, if anything that wasn't covered or not clear, feel free to email me, Leav@optionsamurai.com. I'm available there. I will try best to help you. I can also send you the template that I've done and talk more about what we do here. So basically, wow, I did it a lot faster than I expected. So this is really good. So we have more time for questions if anyone has any. Let me see if I can open the. Thank you, David, for sharing the link. Yes, the link is optionsummary.com. Anyone has any questions? If not, then it's almost 1 a.m. here, so I'm done. I don't see any questions. David, do you see any questions?
No.
Perfect. Great.